From the trading floor of the NYMEX, I'm Jill Malandrino for The Street. And Zook, you come back from Aruba and you bring the vol back with you. What was going on with gold this week?
Well, certainly the volatility has continued. One of the things we had spoke about earlier in the year was volatility for 2015, and we certainly have that. With the non-farm payrolls significantly better and the revisions wildly better than any expectations, certainly puts the Fed on alert to raise interest rates sooner, and I think we've seen the gold be deflated because of that.
Because up until then, it's really been in a $40 range really since December, whether it's $12.20 to $12.60, $12.40 to $12.80. Outside of NFP today, do you expect that range-bound action to continue?
Well, the volatility I consider will stay high. The upward range of 1,300 and the lower range of 1,200, trading within a band fluctuating around 1,250. I think that's going to be good for 215. We're so far on target with that.
All right, let's wrap it up with copper.
Copper, we've seen some significant inflows to LME warehouses, which has depressed the price down and created finally a trading range in the 250 range and find support under 250. Once we get out of the first quarter doldrums in China and finally get some real activity in the manufacturing sector, we could see some upward pricing with demand increasing and some mine production decreasing. So supply and demand might actually come into effect.
Well, that would be nice. Thanks very much, Duke. Let's switch gears and talk some energy. Here we are back talking some energy, and we saw a lot of volatility in the markets across the board this week. Crude in particular, it really has been quite volatile. Has anything changed fundamentally or technically really since 2014?
You know, it's funny you ask that, Jill. In my opinion, no. I mean, fundamentally, you know, there might be a little bit more supply out there. Fundamentally, we might not have as much demand from China or India. However, everything being, in my opinion, hasn't really changed much. I think the psyche of the market has changed. You know, earlier in the year, late in the year, early this year, you know, Goldman came out and, you know, they were looking at, you know, lower oil prices, and sometimes they become a self-fulfilling prophecy, so to speak. And with that, we had, you know, I thought we would stop around $70, and we've continued down to $45 range, and now we're trading these wild $5 swings. The only thing that I can say from my perspective is I'm looking at the crack values. That's the value between the heating oil and gas versus the crude oil price. And those have remained very strong. And if you look at the April, May, and June contracts and the cracks and those 2-1-1 values, they're over $20. So looking at that, I think going forward, we're going to I think it's going to have these wild swings, but I think we're going to drift back up to the $55, $60 range in the summer. Some people are talking 30. I think that's a little rich.
Crude's a giant complex. In your entire career, have you seen the 5-point swings like we have over the past couple of weeks? That really is extraordinary when you look at something this big.
Yeah, we've seen them, but normally when we've seen them, there's probably something geopolitical going on, like in the Middle East, you know, fires in Iraq back during the Iraq. Well, that's how old I am, and that back in 1990. But as far as nothing really changing and having these swings, no, I've never seen anything like that.
Okay, thanks very much.
All right, Jill.
From the trading floor of the NYMEX, I'm Jill Malandrino for The Street.